Hello everyone. This is again Venkatesh Deshpande with more learnings on the long-term wealth creation for our financial freedom. As we talked about, financial freedom can be achieved through consistent compounded wealth. It's not like one day or 2 days or 1 month or 2 months, and in 1 year or 2 years, it would be like a consistently performing asset class will lead you to a long-term wealth creation. So, this is the agenda of the overall my learning sessions for you. As I carry this topic throughout my teachings and my lectures, so the central theme would be around how to build your wealth over the period of time. It's not whenever I advocate wealth building, it is not about a short term. You do some gambling or you do something. You take a lottery bet, or you can say you take some. There are so many other ways with which short term people will be attracted, and they will rather lose money. Uh, instead of getting a huge wealth creation or a huge benefit of their act. So instead of wasting, more onto the just theoretical discussion, let's talk more on the real ways with which we can start our journey of creating long-term wealth. So you might have remembered my previous session on the total, systematic way of doing your financial planning. That was my first, and after then we discussed a lot through about the equity and mutual fund, real estate, gold, and bitcoins. All these are as a different asset class. Now we discussed in a previous session, it was all about gold, how one should buy a gold, and what should be the total allocation of that particular asset in our portfolio, and how do we really buy it effectively in order to leverage greatest advantage among all other category of gold investment. We did that. If you take a look, you can just go ahead and go back and go through the video, so you will get more understand if you lost in that video, right? So that's one thing. So now what actually people look in terms of the huge wealth creation is all towards equity market. Equity is the thing, but your share market. So entire world, or the entire, you can say capitalism, is all revolving around equity market, or you can say the share market. So many myths and disbeliefs around the entire globe. It's not only in the developing economy. It may be like, is there maybe yet maybe there in a developed economy as well, where your elderly people, they say, okay, equity is a bad idea, my son, don't go there because I burned my hand there, right? And other senior will tell you, okay, I did share market investment in my so and so years, and my entire portfolio or my investments gone bad, and I put my 100 rupees and it turned out to be 45 rupees or 50 rupees. So those are the stories that you hear, right? So it is a truth as well, right? It's not like the words in the air. They are the real life journeys of your uncle, your grandpa, or so many. So they are not telling you uh, you know false statements, right? Their experiences were not, you know you need to believe their experience. They are not telling you, they're not discouraging you just for the fact that they don't like equity. They burnt their hand, and that's the reason why they always caution you, at least in India, not to go and do something with the equity market, right? So that's all I had to start with, for you to understand. Whenever you hear such things, it is really normal. It's nothing like abnormal there, and you need to be really reacting normally. Even if you have a tremendous knowledge in any of the field, you need to go through both positive as well as negative aspect of that particular aspect or area. So here, when I started talking about equity, okay, maybe the today's topic is all about equity as an asset class, but in that asset class, we are going to explore more on mutual funds. Okay, this being the core agenda of the today's topic. Hence, when I talk about share market, it's not a gambling zone. It is not a lottery ticket that you buy, and it is not something which it's like punted on, right? So it's not like that. But if you do something which you don't know in entirety, that causes you a harm. So before doing something, before exploring some aspect of financial tools, you need to understand them thoroughly. Without understanding, we don't even dare to run our drive our cars. We don't even go and do our uh, for example you have not passed your 10th or um, your 10 plus 2 without these two stages. You can't go and enroll yourself master in engineering or medical science. You need a background, without which, without the background, without the building blocks, you will not be able to build a great mansion. Then what are those? If you want to go in a particular area, you need to understand it well, right? At least you need to be very aware of it. I am not saying a half knowledge. You need to have a fundamentally strong knowledge about it before you put your hand, before you really start approaching that particular aspect of anything in the life. Like not only about investments. If you want to learn something, if you want to do something, if you want to make a move on anything, you have to explore many things around that particular move, where it leads you to, and how harmful it is when it would be turning around against you, and how good and grateful if you start now and what happens next. So all these you need to be imagining, and you need to be going around, you need to be spending time around it, and then you will be able to make out some small steps. And rather, even if you attain a lot of good theoretical knowledge, understanding around it, but you will not be jumping in full potential. So you need to first, it's not only about the theory. When you pass out from your college with a, any discipline, any degree, so that won't teach you how to be in a public domain, or how to be in your industrial domain, or how to be in your professional career. So this professional career, when you enter in, there you will learn a lot of things. Though you had a theoretical background, but you need to have a practical aspect of it as well. So when you go ahead with these all criteria in your life in order to select a particular investment category, then you will not be burning your hand, right? So these are the stories where your grandpa, your uncle, or your maternal uncle, somebody who told you, are the real life stories, but they did all these mistakes without understanding a full potential or full aspect of the proceedings. They went ahead and did something which they got a bad side effect, I would say. So I don't want to go through that particular path. You need to understand first, then enter into it, right? So let's say we'll talk about mutual funds. Mutual fund, for example, is a pool of fund. When I say pool, there are 100 people, 1,000 people, crores of people put their money in a particular basket or an account. Okay, there will be, let's go to the next slide, right? There will be asset management company, right? For example, you might have heard ICICI Prudential Asset Management Company, HDFC Asset Management Company, Reliance Asset Management Company, UTI as an asset management company. What they do is, their only core business is to collect the money from all the people, retail investor, institutional investors, and somebody who has only 500 rupees also can go and buy a mutual fund, right? Buy in the sense, what they have to, they have to open an account, and through the online account they can go ahead and buy some mutual fund. They have to search. I may just introduce you some tool where we can do practically in a couple of moments. But you understand that, okay, there is a company which will receive your money, Maybe it may be in terms of minimal 500 multiples to 50,000, 5 crore, 10 crore as well in a single shot, right? It depends on the asset size that they are managing. So when you put your money there, what happens is, and they will say there is a particular category of mutual fund. Okay, in that category they are going to announce, and you need to go through that particular category, or the mutual fund name, or the fund name, and then you put your money against that fund name. Okay, then that fund is having a very clear cut ideology, like, okay, money put in this particular fund will be used and invested in so and so companies, or so. They will not be announcing the companies, but you will be able to go and see the list of companies in which the asset manager, like fund manager, is invested right now, right? And you will also be knowing, you will be able to know the category of the fund. Category, you mean whether it is a large cap fund, small cap fund, middle cap, or mid cap fund, or the very small cap fund. This is a micro cap fund. So when I say large, medium, small, and micro, it is all about their market capitalization. Maybe as a new investor, you may not be knowing market cap. So I will gradually, take you all this journey, but bear with me for few details. I think you need to get in a staggered way. I can't put everything in a class where things go beyond your grasp. So hence, what I would say, fund category and expense ratio, and this in IRR, internal return ratio. So all these things are going to be an information, provided by this asset management company if you want to really put your money into that, right? These are the things which we are going to discuss more. Let's go and let's see here, for example. Uh, so for example, this I just wanted to let you know how the mutual fund looks like, right? So this is one particular site wherein you can explore many things. We can this bro, and in my entire lecture series, I won't recommend something which is not through a particular promotion and all. I just use these things just to make you understand, educate you, that's it, right? So there, once my plan is, once you have all full knowledge, then you should be doing on your own all these stuff which I'm just educating, right? So the this is what, see, mutual funds, AMC is HDFC Mutual Fund is an AMC, and HDFC Top 100 Direct Plan, right? So this is the name of the fund that you are going to choose, and when you want to invest into this, right? So if you see HDFC Top 100 Fund Direct Plan, okay, and in this, if you see, this particular fund is of type equity, and this fund is of type large cap. Whenever we say large cap, large market capitalization. What is market capitalization? Market capitalization is simply if you have a Reliance, right? So if there is a Reliance, a company, if it has, let's say, no, let's take a simple calculation. If Reliance current share price is around 2000, let's say, okay, 2000 is the Reliance share price, and if it had 100 sorry 1 lakh shares, right, then what it happens is it has around 20 crore is a market capitalization, but it is very very ill example for the Reliance now has, why I'm multiplying it. 2000 is a price of the stock, and 1 lakh is number of stocks of the Reliance which is available on the same company's record, right? For example, if you consider, instead of 10,000 or 1 lakh shares, right? Let's consider if it is 50 lakhs. The current market capitalization of Reliance is more than around 10,000 crore, sorry, 10 lakh crore. So hence 10 lakh crore, 4 lakh crore, 5 lakh crore, 6 lakh crore, or you can say around 80,000 crores or 50,000 crores, or you can say 85,000 crores. These are all very big companies. Let's not demarcate this. This market capitalization bar will be changed by SEBI time and again. So we don't have to go through the intricacies. What I'm saying is, when you say large cap, it's really the biggest company in. Okay, so hence these will this fund will automatically, I mean, whenever this particular fund will get some amount, they will go and invest in a large company, the biggest company. And when they invest, so what they will say is the fund details. It's a very high risky fund, high risk fund. Minimum amount which can be accepted is 500, and expense ratio, please note it down, is 1.6. And the fund size, which it already collected, it 18,445 crores. There are so many people who are investing, and they have put their penny in this, and the fund size became 18,445 crores. And the net asset value, it is an internal calculation of this particular fund through the AMC, that whenever there is a price in the market, or the shares which they invested, and they have, whenever they grow, this value will change. Today, if the market is around 200 point above, then it would be 65, 665, another 5 NAV, 5 rupees NAV will be bumped up. This is a very simple example I'm giving you to just visualize. So this is a complex calculation. The NAV will go up if your stocks in this particular fund will be growing, right? So this is simple as that. If the stocks in this fund goes down, then this NAV will go down. Okay, we will talk more about what is the volatility, how it happens, and all. For example, if you see its return performance, like this particular fund, the top 200, top 100 fund of the HDFC growth, have given you, if you have invested your 1 lakh, it would have made your 1 lakh to 1 lakh 59,000. Right? So this is around 60% gave you the return. So it's 1 year. This is exceptional. Don't take, and and one more thing is, don't go by this class today, and don't get tempted by these figures, right? So these are all exceptional situation figures. You won't get 50, 60% return in a year in any other cases other than this corona related market swings. So if you see here 13 years, the average is still 13.1%. This is a reality. This is not a reality, right? Something really swing happened here, hence is the 60% return. And over the 5-year period, it is 14.2%. And since inception, whenever you say, the word inception is since beginning. Since launch of this fund, it gave you around 13.1%. So can you imagine why I am watching for the equity investment? It is because simply you never heard your PPF going beyond 8.5 or 9%. You never heard any bank giving you more than 8.5% in any higher inflationary cases. You might have never heard your EPF, Employee Provident Fund, giving you more than 9.5%. It is highest, right? And you never heard any of your, uh, uh, so-called the safest investments. They never earned you more than 10% a year, right? Hence, 13% since inception is a really an attractive uh, rate of return, right? Hence, one should come to the equity investment in order to create a long-term wealth. So that's very important. You go through what you want to do, what at the beginning, and what you want to achieve, what is the rate of interest with which you want to grow your capital. That all depends on how great your knowledge acquisition going forward it would be. So it all depends on your knowledge. It's all depends on your ability to understand the intricacies of the stock market, and use it of your own advantage. So that matters. So this is all about mutual fund today, and my plan is going forward. So to understand more on mutual funds, and what all the different categories of the mutual fund and what is advantages, what is beneficial. And there is also the latest, it's latest in India, but it is not latest in the world. There is the concept called indexing, okay, index mutual fund. So, which I really press you to think about and go for that. If you are a beginning investor or an investor with a good knowledge, but don't want to, spend a lot of time on analyzing the companies and doing a lot of research, and put some part of his capital into the mutual funds where it can grow uninterruptedly and without your, active participation in the market. So the index fund is also known as the the passive mutual fund, right? So we'll talk about that into the next session, and I'll cover more of that thing, and I'll make you understand why the passive investing thing in mutual fund is the greatest thing to the share. I mean, investors in equity market. And coming to this, again, there is a down. There you are going to have this information, right? So the fund comparison they will say, and holding analysis, right? How many companies that they are holding? Total security holdings are 57, right? And the overall portfolio P price to earning ratio is 15.28%. I will cover all these in my fundamental analysis concepts, and I will take you through those journeys as well, right? And then there is a price to book, and don't worry about all these jargons at this moment. What you can understand here is this particular mutual fund has a highest allocation of 98.9%. It's a pure equity fund. It is not invested a single penny in debt market. We discussed about debt mutual funds, right? So it is not a debt mutual fund, it is a equity mutual fund. And hence debt mutual funds always give you, around 8.5 as a maximum, 7.25, 6.5, 7.5, 8.5 max, but this is giving you 5% more than that, right? So hence it's the equity mutual fund. It has a larger advantage over the debt allocation. And why we had to think about asset allocation? It is not all about, put your money everything into a stock market and repent for its volatility. So, but if you can allocate your money, okay, I will tell you at what age and what should be your allocation going forward. I'll make you all the intricacies, clear to you. But let's focus today on mutual fund, where this is equity mutual fund category and has a highest allocation. There is no allocation at the debt side. And if you see the top holding, I was mentioning, right? So HDFC Bank is a biggest allocation that they made, 7.9 or 8.8% you can say. ICICI Bank, State Bank of India, Info, Reliance, the Larsen and Toubro, Housing Finance, HDFC, HDFC, ITC, Axis Bank, National Thermal Power Corporation, NTPC. So these are the company names. Okay, a few examples they have given. If you want to go through all of those companies, it's a bigger list, right? So you need to understand it is doing no other thing than putting your money back into those stocks or the shares of different companies. So you may be wondering, okay, then what is a big deal in this? If I go and buy HDFC Bank, ICICI Bank, State Bank of India, Infosys on my own, then why should I go and invest in mutual fund, right? So this may be your first question now. Yeah, agree. But do you know what is HDFC Bank? Do you know what is ICICI Bank? If you know Infosys, what do you know about it? Is it a software company? Is it enough for you to understand what Infosys is all about? Okay, you know Reliance. Maybe you are using Geo, but do you know what other things Reliance do? No. If you're not knowing it, you may be knowing its business, but how to invest, when to invest, why to invest, at what price you need to invest, and how to take an advantage of volatility in the market. So you're not expert in that. You are not qualified, right? Hence, I would say you are not qualified in the sense you are not having enough knowledge right now to go through these companies and understand whether they are investable or not. There is no qualification needed as such. When I said that you are not qualified, you need to be having a qualifying knowledge. You don't have to have a master's degree for investors. There's no need of master's degree. There's no need of any college graduation at all. If you know a very good how to analyze a company and what that company does, what is its cash flows, what is its balance sheet, and how the debt has been managed, what is the management of the company. These are very lot details that you need to go into. As a mutual fund investor, you don't have to do. You don't have to go through all these intricacies because the fund manager, the fund manager who is running this particular fund will take care of those investment decisions on his part. Yeah? Right? So the fund manager is Prashant Jain. He's a good guy. He is having around 25, 20 plus years of experience in the investing career, and he might have done a lot of research on those particular things, and then only he will put the money, right? So AMC will have a fund managers. When you put your money into the particular fund, the which is run by that AMC, will have an associated fund manager who is very good in equity research. He knows when to sell, when to buy, what to buy, and what to sell, right? And he will manage your money in equity markets. Hence, if you are an investor of mutual funds, you need to just know that market has ups and downs, right? If it goes up, you should not be very cheerful, and if it goes down, you should not be very worried that okay, my 1 lakh has gone down to 60,000 rupees, right? Hence, let me withdraw my money from the mutual fund. Don't do that. Okay, if you don't want to do that, if you want to be patient enough in every upswing and downswings, then you need to understand what markets are, how the things play around it, and then how to take an advantage of those. Then you will be heading ahead for the equity and its related classes. So let me take you through those classes as well going forward. Let me also why I'm starting from the mutual fund. You need to be going in this field step by step. What to select, at what juncture you want to begin with your financial planning and financial the exposure, that's up to you. But I'm giving you all the tools and intros and the internal details of it, so that you can intelligently select one among them and start your career. Investment approach would be based on your own understanding and your own knowledge, right? Acquire a lot of knowledge that will help you build your financial goals going forward, right? So that's the today's topic of discussion. And next would be, what is the difference between the active investment and passive investment, and what is index fund, and what are the growth plans for different in mutual fund categories, mutual fund plans, mutual fund the expense ratios, how the mutual fund costs, all those details. It's not in the one class we can cover, but definitely I will go topic by topic and make you understand what is the right choice for you at the end of mutual fund series. Okay, stay tuned and keep learning. Thank you.